Good evening. Thanks for joining us on India Business Hour. I'm Shereen Bhan. The headlines we're tracking for you tonight. Stock market slumped to the lowest level in the last 3 months. The Sensex loses nearly 900 points. The Nifty is down almost 311 lakh crore rupees in market cap, wiped out in 2 sessions. The Adani stock crowd deepens. All group stocks plunge in trade for the second day in a row after Hindenburg report raised red flags. 4 lakh crore rupees in market cap, wiped out in 2 sessions. Nifty Bank falls 5% this week amidst concerns over exposure to the Adani Group. The SBI tells CNBC-TV18 it's not concerned about the conglomerate's ability to service its debt, says its loans are secured by cash-generating assets. India implements a T+1 settlement plan. All trade-related settlements in top securities must be done within 24 hours of the next working day. A SEBI study separately also reveals almost 9 out of 10 traders lose money in F&O transactions, and the ones gaining the most are the brokers. The Finance Minister may provide income tax relief to the middle class in what will be the last full budget before the 2024 elections. Sources say those earning more than 8 lakh rupees per annum could see a tax reduction. The 30% tax slab could be cut to 25%. That's an exclusive. Vedanta's profits plunge 41% in Q3. Revenues remain flat. The company announces a 4th interim dividend to the parent amounting to more than 4,600 crores. Air India is likely to announce an order of 220 Boeing aircraft today. This is the first ever aircraft purchased by the airline after the Tata takeover. The airline is also in talks with Airbus to buy 275 planes. Strapped for cash, the board of Vodafone Idea will meet on the 31st of January to consider a preferential issue to tower company ATC. The board will seek shareholder approval to issue optionally convertible debentures worth 1,600 crore rupees. Gujarat Police files a charge sheet in the Morbi bridge collapse case, names Oriva MD Jaisukh Patel as one of the 10 accused, even as he remains on the run. Oriva was responsible for the renovation and developments of the suspension bridge. 9 others have been arrested already. Former Punjab Chief Minister Captain Amrinder Singh is likely to become the next governor of Maharashtra. He's set to replace Bhagat Singh Koshyari, who is stepping down after a spate of controversies. After a body blow due to the pandemic, India's plastic processing industry is pinning its hopes on the budget to boost manufacturing and exports. A special report from the plastic hub of Dadra and Silvassa coming up. And is ChatGPT coming after your job? We speak to top HR executives to find out if the fears are real. Well, let's start with what was another sell-off on the Lal Street. The Sensex lost nearly 900 points and the Nifty was down about 300 points, ending at their lowest level in 3 months. 11 lakh crore rupees in market cap being wiped out in the last 2 trading sessions. So we've seen the Sensex and the Nifty lost 2% this week. That's the worst weekly drop so far in 2023. Of course, the year has just started. Prashant is standing by with the market wrap. Prashant, a week end to the market trading week. And, of course, we go into the budget on a weak footing.
A sharp cut and the Nifty ending about 1.5% lower. Banks having it even worse, 3% loss on the Nifty Bank. Important levels went, we'll get to that in just a bit. The Adani Group was the one which sold off as a whole. And, I mean, cuts between 5 and 20% depending on what you look at. The stocks that are on your screen. And, you know, they recovered from the lows of the day, but ending with the sharp cuts. Ambuja Cement and ACC are the others which also lost because of the same reason. Banks are down sharply. So SBI was the top loser in the Nifty, but other names like ICICI, IndusInd Bank, Kotak, etc. also lost. But not just private banks. The Nifty PSU Bank Index was the top loser on the sectoral front, and that told you something. Metals is another area, unrelated, which was down and under pressure. Mid caps and small caps also saw selling. There was a fair bit of, in a way, collateral damage in that sense, which was visible throughout the market. Unrelated sort of stocks also coming under pressure. Earnings have missed in many cases recently. The earnings season is on. So Dixon, Teamlease, Indus Tower are 3 names where we saw sort of continued sharp reactions on the downside. And then you had broader pressure in names like HPCL, Angel One and NCC which lost a fair bit. The Nifty on an intraday basis broke below two important levels, an important retracement level, and the 200-week exponential moving average also was breached intraday. We've closed above both these levels, so the support levels are very clear. It stands at about 17,500, 17,550, roughly in that area, and it's important it's held. Next week, of course, is the budget and the Fed decision. Could those be a bit of a catalyst, a turning point, because the market is going into them very weak? That's something we'll need to wait and watch. Back to you.
Yes, we will be watching the budget and, of course, the FOMC commentary closely. Prashant, many thanks for joining us. As Prashant mentioned, shares of the Adani Group continue to remain under pressure after a report by Hindenburg Research revealed short positions and flagged multiple risks. The rout has wiped out 4.2 lakh crore rupees from the group's market cap in the last two trading sessions. Now, shares of Adani Enterprises, which kicked off its follow-on public offer, slumped more than 18%, falling below the lower range of the FPO price of 3,112 rupees. Meanwhile, the Adani Group has said it is considering legal action against Hindenburg Research, calling the report maliciously mischievous. However, Hindenburg has responded, saying it stands by its report and has in fact challenged the Adani Group to file the lawsuit in the US, where Hindenburg is based. Adani Group has made a fresh submission to the stock exchanges over the Hindenburg report. It says, and I quote, out of the 89 questions raised by Hindenburg, 21 questions are nothing but Adani portfolio's own public disclosures. Adani also claimed that Hindenburg report is, and I quote, devoid of facts. On the issue of over-leverage, Adani said 100 of its companies are rated, and these account for 100% of its EBITDA. Adani has dismissed charges that its balance sheet is artificially inflated, saying out of the 9 listed companies in its portfolio, 6 companies are subject to regulatory review for revenue, costs and capex. And staying with that story, State Bank of India has told CNBC-TV18 it is not concerned about the conglomerate's ability to service its debt. SBI says its loans are secured by cash-generating assets. Ritu joins us now with more details. Ritu, take us through what SBI has to say, because this has been a big weight on the market, specifically on the bank Nifty.
Well, first to begin with, SBI has not really clarified what the exact quantum of its exposure to Adani Group is, but it is understood SBI is one of the largest lenders to the company as far as Indian banks are concerned. Now, SBI did wish to clarify that its exposure is well within the large exposure framework limits of the Reserve Bank of India, which is 25% of the Tier 1 capital. Secondly, it said that all of SBI's exposure is secured by cash-generating assets of Adani Group with an escrow mechanism in place, and therefore debt service does not look to be a challenge at this point of time. Thirdly, the Indian banking system's exposure to Adani Group has been coming down consistently over the last 2 to 3 years, and at the same time the debt to EBITDA for Adani Group has been getting better, which means the debt servicing ability of the company has improved according to State Bank of India. Also, most of the acquisitions that Adani Group has been making have been funded through overseas market borrowing, so there is no exposure build-up of the Indian banking system, at least on that front as well. Then, of course, coming to State Bank of India, they've said that they've been reviewing their non-funded exposures, where they take a view on whether there will be any stress over the next 12-month period. And at that, with that in mind, they've not found any reason for concern, no likelihood of any devolvement at this juncture when Adani Group is concerned. That said, they do keep a watch on all exposures, and they said they will, take adequate measures from time to time based on their assessment.
Ritu, many thanks. That is State Bank of India's clarification with respect to the Adani Group exposure. Now, shares of LIC, which is a shareholder in the Adani Group stocks, also under pressure. In fact, LIC has lost 16,300 crore rupees of its investment value in the recent Adani sell-off. Yash joins us now with more. Yash.
Well, Shereen, if you look at LIC as an institution, they've always been known to be long-term investors. They are not institutions who enter into trigger buying or trigger selling. And that's exactly what's playing out in the scenario of Adani Group stocks as well. We've spoken to some of our sources at LIC. What seems to be coming from that side is that there's no panic with what played out on Wednesday as well as today as far as Adani Group stocks are concerned. And they've not participated as far as the sell-off in the Adani Group stocks is concerned. But nevertheless, there was collateral damage as far as LIC's investment book is concerned. We've taken some numbers as far as the day's low hit on Adani Group stocks is concerned. And LIC's investment book on a mark-to-market basis lost a market capitalization of nearly 16,300 crore rupees. LIC's investment book, as per the last trading session, was 76,800 crore rupees. At the end of today's trading session, taking in consideration the lows hit on Adani Group stocks, it stood at 60,500 crore rupees, so a loss of about 16,000 crore rupees. The loss as far as the investment value is concerned was maximum in Ambuja Cement, that was followed by Adani Total as well as Adani Ports.
Appreciate you joining us, Yasha. That is the latest as far as LIC's impact is concerned. Now, it's a historic day for the Indian stock market. It has become the first in the world to fully transition to a trading plus one-day settlement cycle. And this means that shares sold or bought will reflect in an investor's demat account the next working day. Earlier transactions on the stock exchanges were settled after 2 working days. So good news there coming in for our markets. Budget 2023, it will be the last full budget before the general election next year. And the finance minister is likely to play a balancing act between populism and fiscal prudence. Sources have told CNBC-TV18 the government is looking to provide tax relief to middle-class salaried employees. Parikshit joins us now with the details. Parikshit, this has been the hope for the last several budgets. Finally, will this budget deliver for the middle class?
Well, recognizing the contribution of the middle class would be a key theme in Budget 2023. The centre is likely to announce significant changes in the tax regime to reduce the tax burden and put more disposable income in the hands of the aspirational class. One such step is the likely introduction of a new tax slab for those earning between rupees 8 and 10 lakhs and a reduction of tax rate on this category from 20% currently to 10%. Also, the 30% tax rate on those earning more than 10 lakhs could be reduced to 25%. Reducing certain cess rates is also being contemplated. Other tax measures to ease the pressure on the middle class could be increasing exemption limit under ATC from 1.5 to 2 lakhs, increasing exemption on housing loans and increasing tax benefits under ATD. That's not all. Job creation could be the other big theme in the budget, with a scheme to increase urban employment and a scheme to support gig workers with loans. The FM is likely to nudge banks to lend more to MSMEs with interest subvention and loans without collateral. For the farmers, the government is considering increasing subsidy under Kisan Samman Nidhi from rupees 6,000 to 8,000. On the PLI front, the FM could announce a fresh outlay for sectors which are labour-intensive with high export potential and those within MSME value chain. This is the last full budget ahead of the general election. Let's see how the government does a balancing act between populism and fiscal prudence and also handle the fiscal deficit.
Parikshit, many thanks. Well, that is on the table for consideration. How much of that is finally going to make its way into Budget 2023? We will know on the 1st of February, but these are recommendations and demands that have been put on the table, and the government is considering them at this point in time. We learned from sources that fund allocation to states for schemes aligned with the PM Gati Shakti, the multinodal infrastructure pipeline, could double in the upcoming budget. Abhimanyu joins us now with more. Abhimanyu, take us through what could happen.
Allocation to states for PM Gati Shakti aligned infrastructure schemes is likely to be doubled in the upcoming union budget. Sources have indicated that the allocation is going to increase from the current 5,000 crore rupees to 10,000 crore rupees, since various requests were made by the states to the union government for an increased allocation. States have already identified various targets for development of aggregation centers as well as to develop last mile connectivity. States have already utilized in entirety the funds which were earlier allocated by the central government for PM Gati Shakti aligned schemes. It remains to be seen what more is going to be the part of the union government's decision, apart from a possible increase in allocation which the states have sought, even as the states want to implement various schemes pertaining to PM Gati Shakti, be it strengthening of infrastructure or increase in the number of aggregation centers.
Abhimanyu, many thanks. And moving away from the budget now to earnings corner, a quick check of the other headlines we're tracking tonight. Vedanta's profits plunging 41% in Q3, revenues remaining flat. The company announced a 4th interim dividend to the parent amounting to more than 4,600 crore rupees. Strapped for cash, the board of Vodafone Idea will meet on the 31st of January to consider a preferential issue to tower company ATC. The board will seek shareholders' approval to issue optionally convertible debentures worth 1,600 crore rupees. If you remember the bizarre incident at the Bengaluru airport a few days ago when a Go First flight had left without 50 passengers, well, DGCA has acted against the airline. A fine of 10 lakh rupees has been imposed. Go First had told the DGCA that there was improper communication between the terminal coordinator, the commercial staff and the crew regarding the boarding of passengers. And more from the aviation space. Air India completes a year under the wings of the Tatas. The airline is likely to announce a large aircraft order of 220 Boeing planes. Madiha joins us now to explain what this means for Air India's fleet size and its expansion plans. Madiha.
Well, this has been a highly anticipated and awaited announcement after months of tough negotiations. The airline is expected to buy around 500 aircraft, and if we go by the Reuters report, then the airline is likely to seal part of this large order with Boeing for 220 planes. This includes 190 Boeing 737 MAX, which is a narrow-body plane. Then there are 20 Boeing 787s and 10 Boeing 777X, which are wide-body planes. The second part of the deal, as per the report, includes 275 Airbus aircraft. These will have 235 Airbus single-aisle jets and about 40 Airbus A350, which are wide-body aircraft. So it is pretty clear from this order that Air India is looking to expand its business on domestic and short-haul destinations like the Gulf, South Asia and Southeast Asian countries, and wide-body planes will be utilized for the US and European destinations. The airline has already added 16 new international routes and is likely to add more in the coming days. Let me tell you, this is not just the first aircraft order ever placed by the Tatas after the Tatas took over, but it is also the first time in 18 years that Air India will buy new aircraft, the last one being in 2005 when the government had allowed the airline to buy 111 planes. The airline currently has 218 planes in its fleet, including that of Air India Express, Air Asia India and Vistara. For now, it has the second largest fleet after Indigo.
All right, Madiha, many thanks for joining us. That is Air India's plans to expand its fleet. Time for us to head to a short break, but up next, as the plastic processing industry limps back after being hit by the pandemic, rising raw material costs and falling demand, all hopes are pinned on the upcoming union budget. Shilpa reports from Dadra and Silvassa that measures to boost local manufacturing and make exports more competitive is on the top of the industry's wish list.
Vivek Daga, director at Sarvotam Polymers in Dadra, says he has never seen demand fall like it has this year. His plastic company, which makes plastic items and packaging materials for companies such as D-Mart, Godrej Consumer, Plum, says orders, especially for household items, have fallen significantly in the past year, forcing them to run at just 40 to 60% capacity. A ban on single-use plastic has only made matters worse.
I am in the industry since last 12 years. But I didn't find the demand is dropped like this. This year demand is very much low. Maybe because of COVID and maybe because of our economy in domestic market, demand is very low. And also in a household categories, because of this ban on single plastic, there is an increase of near about 12 to 15% in our packing.
Adding to rising costs and low demand, an influx of cheap imports from countries like China is also hurting the domestic market. The industry says increasing the import duty on value-added products to at least 20% will help boost local manufacturing.
Once the custom duty on these finished products are taken above, the manufacturing sector will grow in our country. The import duty on the polymer, what people like us we are paying now, we are not competent enough with the local material. If the duty is decreased, maybe there is a good scope for the converters. They can be properly competitive.
Exports of plastics too have slipped amid tough macroeconomic conditions. According to data from the Plastic Export Promotion Council, exports of plastic in the April to November 2022 period fell 6.7% year-on-year to $8,178 million.
Demand from US, Europe and other countries has gone down significantly. There were other issues also related to this, like shipping cost. The shipping cost had gone up very high, so their imports were very expensive for them. Further also there was logistics issues. The product became uncompetitive to buy from India. In those periods when there was a very big slump in the international market, or you can say as a God-gifted thing, Indian demand picked up.
To boost exports, the industry hopes the government will reduce import duty on their key raw material polymer to help make exports of value-added products from India more competitive.
Our main demand will be to see that we get our incentives for export, which we were getting earlier. In the last few years, we were getting some money, approximately 6%, 3%, 4%. But this year, since last year onwards, this has become nil, zero. And that was a very good cushion to fight against China and other Asian countries for exports.
Other expectations also include support in reducing logistics costs, subsidies, and a lower threshold for the production-linked incentive scheme. Solar and renewable energy is being seen as the next big opportunity for plastic processors to be able to make parts and components for solar panels and windmills. To that effect, the industry is hoping that the government offers some incentives like higher import duties on components like EVA and backsheet to promote local manufacturing, which would be a big opportunity for plastic processors at a time where demand from other sectors is still limping back up. With camera person Ajay Dabolkar in Dadra, Shilpa Ranipeta.
Well, are you worried that ChatGPT will take away your job? The disruptions in the tech industry have been massive of late, and there is a growing fear that this artificial intelligence-backed chatbot and other similar applications will take over jobs as we know them. Kanishka Sarkar caught up with some HR executives to find out how real the fear is and what are the likely changes which today's workforce needs to keep in mind.
A World Economic Forum report says that 97 million new jobs will be created by 2025 due to AI and automation. Meanwhile, ChatGPT is the talk of the town, and with that is a rising fear that an AI capable of responding to prompts, questions, statements in a very human-like way and in a record time might be bad for the job market. However, a global organizational consulting firm says that there's need to get past the thinking that robots are taking away human jobs.
This is really humans plus machines is where we are now, and it is the way forward. And the more comfortable humans get with controlling the parameters, the more comfortable they'll get with tech, I think.
According to Colwell, one will still have to be adept at asking the right questions to a bot like ChatGPT. She argues that if one can ask the right question, interpret and edit the answer, they're using AI to help express themselves. Ira Gupta, HR head Microsoft India, is of similar view and adds that reskilling is paramount. This, she says, is more cost-effective too.
Not only is it a cost-effective proposition, but reskilling is also going to enable us to attract and retain the talent that we need. And interestingly, 9 out of 10 employees in India, in a work trend index survey that Microsoft did in September of last year, actually said that they would stay back in an organization which they thought enabled them to learn for their career development.
Reflecting on the job roles that will be in demand for the next 10 years, given the pace of tech disruption, Korn Ferry's Colwell believes that data scientists will be in demand. However, critical thinking will be the key.
Most experts believe that the next set of leaders will need non-technical skills. It's not about code learning or rote processes, but about very human thinking about the end customer and what the business needs. In Delhi, Kanishka Sarkar.
Well, that is the future. And with that, it is time for us to wrap up this edition of India Business Hour. Thanks very much for watching. Do stay tuned to the news that continues on CNBC-TV18. Have a great weekend and see you on Monday morning as we enter the budget week. Till then, goodbye.